The stock market, confidence in government, gold and silver, bull and bear markets. Merry Christmas and a most happy new year to all investors, traders, and students of the Market Mark YouTube channel, wishing you all the best for another year of prosperity, physically, mentally, spiritually, and financially. I have changed my YouTube channel name to Market Mark since I want to cover and analyze broader sectors of the financial markets and not purely cryptocurrency. As such, from now I will be analyzing a range of financial instruments and/or derivatives which are traded on markets worldwide. However, I will still continue to analyze cryptocurrencies in my videos. This year has been a volatile year for all financial instruments overall. In March of 2020, we had the panic, which resulted in 30% of a decline in the respect to the Dow Jones Industrial Average, which for most traders is used as a benchmark for stock market median returns. However, with the Federal Reserve coming to the rescue on March 23rd of 2020, this supplied the market with confidence and hence providing liquidity and confidence, resulting in a V-shaped market recovery. However, due to price to earnings and price to sales ratios at historic extremities, this indicates a stock market decline of at least 20%, which is inevitable but not necessarily imminent. With the market V-shaped recovery, we have also seen companies with more realistic price to sales and earnings ratios recovery significantly, with some recovering in excess of 100% since their March lows. Namely, this would include, but not limited to, gold, silver, platinum, palladium, and other commodities and mining stocks, and also biotech. When the Dow dropped its most in recorded history, apart from the crash of 87, which was a 22% decline in one day, we saw Bitcoin also lose 40% on paper value on that day. In hindsight, this was manna from heaven for traders/investors, as they were able to purchase coins and Bitcoin at very reasonable prices. The subsequent rise in anti-fiat instruments or anti-government financial products has seen the likes of gold, silver, and cryptocurrencies go to the moon in United States dollar valuations, literally, with Bitcoin recently hitting 28,000 US dollars per Bitcoin. Anyone who bought when this channel was recommending the digital asset as non-financial advice is up considerably, with the option of taking profits whenever you would like. And I have personally taken profits at certain levels above 20k, including the last few days above 27,000 per Bitcoin in US dollar terms. Personally, I would love to see Bitcoin come lower again, so our subscribers on this channel can buy more of the world's favorite digital asset, which is why taking profits at these levels would make sense and logic after the parabolic move in price and re-entering some new positions, going long again on Bitcoin should the price fall a few thousand points, or maybe even one day replicate the March movements and go down temporarily up to 60% decline over a few weeks' time, which was what happened in February of this year. High risk is most often correlated with high returns on investment. How about silver? Silver has been the best performing commodity of this year. Silver is the most undervalued commodity in the world. CEO of First Majestic which is Keith Neumeyer, indicates that his company mines the product at a ratio of 8:1, meaning for every 1 ounce of gold, the company mines 8 ounces of silver. Absurdly out of whack comparing to the currency paper futures market ratio of 70 and above currently that amount. If we go gold, silver ratio, we can see that the ratio is currently at 72, while the historic mean is around 40, clearly indicating that silver is obviously the cheaper and more undervalued asset at this point in time. If we zoom out and look at the monthly chart, we can see that in 2011, which was the peak for silver, it was a wise decision to move silver profits into gold to protect your silver gains. But in March of this year, during the market crash, we saw the ratio hit an all-time high of 126.56 intraday. That was the highest gold has been valued to silver, and vice versa, meaning silver was at its extreme point in being undervalued at that point in time. There is still gains to be made in silver, even more so than gold, I believe, because the ratio always declines in a bull market, which is increasing stock prices, and the bear market is decreasing stock prices. That being said, I believe that Bitcoin will probably produce the highest returns on investment. Obviously, if you bought when I was buying here, and all the way down to 4,000. You had the opportunity to buy when I was buying at $10,500, and you could have bought as low as $4,000. Not sure how many people who were doing that, but you had a chance to buy at those prices, at $4,000 in March. Anyone who bought at $4,000 is currently up almost 600%, which is abnormal for any asset, and an extremely good return on investment. However, if you bought later, obviously the returns would be different. So in the future, I think the returns on silver will shock everyone in the world. Yes, Bitcoin will go up. Yes, it will. But I would rather have my money in a proven asset that has a proven track record. And yes, Bitcoin deserves an allocation in one's portfolio. But silver is going to do a Bitcoin in the future, I believe. It will rise a few dollars per day when it really starts to get moving. But by that time, it'll be too late. And no shops will be selling physical silver. And the mining stocks will be going parabolic. You'll see 1 cent stocks go to $10 or $20. Yes, Bitcoin will go to 100K eventually. When? Not sure. But it could happen in the next few years. And $1 million for Bitcoin doesn't seem so crazy now, does it? Obviously now is the hype. The Fear and Greed Index is at an all-time high, above 90, which is never a good sign if you want to buy things on the cheap. But Bitcoin, I want to see a pullback right now. It may not come. It may go to $30,000. But I like to see a pullback at these current prices because it's gone stupendous. But it could keep going up. It could, for sure. But a parabolic move usually results in a cool-off. Where that cool-off may end is anyone's guess. But 14k was previous resistance, so that would probably serve as support. Hence, I don't believe we will see Bitcoin below 15k again, at least not for a long time. I could be wrong, and we could see next month Bitcoin at $15,000. We could, or at $20,000. It's definitely possible. We could even see it go down to 10k, although I wouldn't give that a high chance of probability. But anywhere from 20k to 15k seems like a decent pullback correction and drop from these current prices. Nevertheless, returning to silver. When demand meets supply on both investment and industrial demand worldwide, my minimum price target in the next 3 years, now could happen in the next 5 years, not sure, but in the next 3 years, I believe the price of silver will be over $100 per ounce. Not bad if you were buying, when I was buying, at $15, anywhere from $15 to $18. Not bad. But $100 would not be the top in my opinion. The top is likely to come when the gold-silver ratio is at 20 or below. Now that might seem stupendous at current levels, but in a gold bull market, we see the ratio decline, and the lowest it has ever been was in fact 15 or 16 in 1980. An extremely low ratio. Now that was when silver was at its peak. But historically, when the ratio goes too far up, the ratio will also come too far down. I'm personally looking to take profits out of silver and going into gold or whatever is undervalued at that time, should the ratio go below 40 and 30, then I'll consider not so much into silver, but into gold or any asset which is undervalued at that time. This is implying potential $300 silver or above. Should gold hit $5,000 per ounce, which I don't believe is crazy, in fact, more possible than Bitcoin hitting $1 million, not possible, Bitcoin will hit $1 million most likely one day. When is anyone's guess. But if someone had to ask me what is first, Bitcoin 1 million or gold 5,000, I would go with the latter. Gold at 5k would probably be first in my opinion. I also expect that gold mining stocks and silver mining stocks to generate returns that were previously only thought possible with altcoins in the cryptocurrency market. Expect some mining stocks to hit $10, even if they are only 1 cent now. Yes, that is 1 cent per share. My favorite investments would be currently the UVXY, which is a measure of volatility and historically goes up only when the market crashes. Should the market go below the March lows, which I don't think is unreasonable, although it would be a severe crash and cause a lot of people to lose a lot of money, this UVXY, which trades in New York, would go up from $10 to $100 or above, generating in excess of 840%. But if you want to hold it to its absolute peak and cash out at $130, you would generate a return of 1,120% or even more. Highly volatile, only for those who have money they're willing to lose and want to speculate and bet on market crash, which I'm currently going to do. The other one you can buy if you don't have access to New York exchanges. You can buy the Bear Fund, Strong Bear US Bear Fund. You can buy this at $1.65 or $1.60 where it is right now. Sell it at or above $6, which would be in excess of a 250% return. Still an amazing return. When the price of silver goes down again, which it will in my opinion, should the market crash, we could see silver mines hit as low as 10 cents. It could actually wick below this, although I don't think that's very likely, and anything below 13 cents to 10 cents is a bargain in my opinion, considering current silver prices. The Dow Jones is what I'm looking at right now. The red line is the resistance. We have not surpassed the resistance in over 3 years, and there is extreme selling pressure each time we approach this red line. Should the market melt up and keep going up with this thinly uptrend triangle, we could actually go up to 2000 and maybe 30,000 something. But I think that we are not going to be able to penetrate this red line this year, possibly next year, but I think a market crash and a drop in the Dow Jones Industrial Average is more likely than us surpassing the red line. And I believe that we will reach some extreme volatility in the markets when Joe Biden becomes inaugurated and becomes President of the United States. Currently, we have the support line, which could probably be extended like this to create a more reliable support levels. I believe that we would not go below this line, and yes, if market crashes, if the Dow Jones goes down that much, everything would be on sale. Absolutely everything. That would result in a decline of just below 40%, which would be an extravagant drop and would cause the UVIXI and the Bear Fund to absolutely skyrocket. The oil price is likely to remain where it is right now. However, should the market crash again, I wouldn't be surprised to see an oil price below $10. And in that case, I would be buying some oil stocks because they would be undervalued and hated at that time. The dollar index is currently at 90, currently low because of Joe Biden become president most likely, and should he become president, the dollar will continue to decline. However, should Trump pull it off and Trump wins the election, I expect the dollar index to rise and go up substantially. My minimum target for the dollar index would be 95 should Trump win, or even higher. This would be negative temporarily for gold and silver and Bitcoin, as they are inversely correlated to the US dollar. The 10-year Treasury is the benchmark for the debt market in the world. When the 10-year yield goes down, this is telling you that people are parking their money in government debt. When the yield goes up, this is telling you that people are exiting government bonds and buying other financial assets. The gold price has seen a substantial rise in August and is now cooling off after a parabolic rise similar to what Bitcoin did in 2017. Now, gold will go up in the next few years. That is not even a question. The question is, how low can it go should the market crash? And if we use technical analysis, we can see from the current highs to the low was a drop of 10%. If we attach that to the support level, which was 1,865 approximately, or 1,850, then we could see a possible decline of gold down to these levels, and at those points I will be buying heavily. Silver, I want to see below $20 again. If silver is below $20 again, that would be a must buy, an absolute bargain in my opinion. However, I would not be against buying silver should it go below $21. $21 would be my highest I would pay for it. Below that, I would definitely be willing to buy a lot more. Silver mines is a must buy in my opinion, what I'm personally doing with my portfolio. This Investigator Resources is very similar to silver mines. When I was buying it around 1.3 and now it's at 6.7. So we can see from about 1.3 to 6.7 is 420% return, which is not bad. Now, if this declines to 3 cents or below, I will be buying more of this stock. For sure. If you want to know more about these companies, I'll post links in the description. Or you can go right now and follow what I'm doing. Silver Mines Limited. You can see the website right now. The largest undeveloped silver project in Australia and one of the largest globally. 100% owned, and it is a pure silver mine. The leading Australian silver exploration company listed on the ASX. That is one of them. Another one is Investigator Resources. IVR. You can look at them when you are done my video, or you can pause the video right now and have a look at them. Which one is it? It would be this one. So on the website, you can have a look at it. High risk rating, yeah, high risk but high return also. You buy the right price, the returns are staggering. Again, if you buy these stocks at the right prices, then the prices and the returns are staggering. The returns may not be that well because of the high risk and weak fundamentals, apparently, which I don't think is even real at this point in time, considering the silver price has gone up so much. However, Wall Street doesn't want you to buy those stocks because they want to buy them themselves and pump their own bags. However, the goal of this channel is to provide macro insights, fundamental analysis, and see what is undervalued and where to put your money or park your money. But it's obviously non-financial advice at any time. A few strangers have asked me for the following list of information. Question: is the current crypto surge due to supply/demand forces or because the actual use of crypto has increased? The first option tells me that its price is currently inflated, similar to many stocks on the ASX and NASDAQ, which is very true in my opinion. However, if the use of crypto has truly increased, I may consider investing into some altcoins. I would only do so if there is a major stock market crash and the altcoins are hated and are slammed in excess of 30% or even more intraday and there is blood in the streets. If there is cheap altcoins to buy that you really want and the market is down massively, yes, I would speculate myself and buy some as a Hail Mary bid to become rich. But that is fast money. One must realize that will not make you wealthy at all, but is merely a one-off high return investment return. So you need to consider your own personal positions with your finances. The answer, in my opinion, the current rise of Bitcoin, gold, and silver has been in reaction to a weakening US dollar. Since Joe Biden is likely, although not certain, to become the next US president in roughly a month's time, a Democratic president has historically been negative for the nation's currency due to increased government expenditure and socialistic programs for the public. As such, we have seen a rush to assets which tend to trade the opposite direction to government bonds and debt instruments, Another reason as to why Bitcoin has risen extravagantly is due to its rapid adoption and advancements in technology and worldwide usability. I stick by my prediction that Bitcoin will eventually, likely in the next 5 years, hit $100,000 per Bitcoin, and one day $1 million per Bitcoin, which is likely in the next 10 or 15 years. Cryptocurrency has a very small market cap. One must consider this. A market capitalization which is so small makes it very easy to pump and dump. Now, it's not a Ponzi scheme. It is real, and cryptocurrency is not a scam. At least Bitcoin is not. Otherwise, Wall Street would not be buying it. So it doesn't take a lot of money from Wall Street or other financial institutions to pump Bitcoin to 100k and other altcoins to extreme levels, providing abnormal returns. However, I do strongly emphasize the fact that stock prices are currently inflated massively right now. As such, I am positioning myself for a major stock market correction/crash in the Dow Jones specifically in the next 3 months. So before Easter next year, even before March next year, I believe the market will crash. Expecting the market to crash even approaching March lows, which would be close. Let's see right now. Current prices in the Dow Jones to March levels would be almost a 40% decline in the market, which would take everything down with it, which is traded as a stock or a cryptocurrency, gold, silver, commodities, etc. As such, I am personally buying 2 stocks which would hedge myself against a decline in the market and profit massively from a severe market crash. Those being the UVXY, the ProShares Trust Ultra VIX Short-Term Future ETF, which could go as high as $100, as previously mentioned. From $10 to $100 would be roughly 800% return, but should volatility be even greater than that on the next market crash, which is not impossible, you could see in excess of 1,100% returns. Whilst the bear fund on the ASX could return as much as 270% or more. These stocks are namely UVXY, trades in New York, which is measuring ultra short-term volatility according to the USA equity market, and the bear fund, the BB Beta US Bear TMF units on the ASX, corresponds 2 times conversely of the S&P 500 daily movements, which we can see right now. The S&P 500 has generated similar, if not greater returns than the Dow Jones. If the S&P 500, SPX for short, goes down to March levels, which is possible, but not sure if it's likely, we could see a 40% drop. However, I would say that a 30% drop is more likely, or even a 20% drop is likely. I'm not sure when the market will stop crashing, if it does start to turn over, but if it does, panic selling will re-enter the market as it did in March, and volatility will rise, contributing to the extravagant rise of the UVXY and the BBUS. Should the market crash, I'll be buying silver mining stocks, Bitcoin if it goes below 15k, uranium stocks as they are hated and unloved, although vital for energy worldwide, and is one of the cleanest energies if used correctly. Some biotech stocks, oil stocks if the oil prices reach single digits again, and maybe even zero per barrel on a bloodbath on the markets. And also other commodity stocks, including gold stocks. When the market crashes, and if it does, which I believe is out of 10, 9 out of 10 possible and probable in the next 3 months, I would say, or 4 months at max. I will be 100% exiting my short trades and going long on the stocks and ETFs such as AGQ, which is an ultra silver fund for the long term. So I'm looking to buy this below $30. If it goes, and it will go, surpass $70 per share again, that'll be a return of 135%. Obviously, if you buy it lower and the market crashes and you get filled and you buy this stock lower, you will get more returns because of the lower entry price. So in my opinion, the assets that will do the best in the next 3 years will be, first, silver, Bitcoin, gold. Secondly, commodity mining stocks. Thirdly, components of the NASDAQ, which is the tech stocks. NAS composite has gone parabolic and people have fled to tech stocks since March, obviously. If you bought in March, you would be up almost 100%. If you are judging it on the broad index, which is crazy for a broad index return on an investment. And yes, I believe the NASDAQ will continue to go up, but we may see, obviously, a major correction in the NASDAQ before we head higher. It could melt up, and probably will, for a few more weeks, should the Dow Jones continue to melt up. But if the Dow Jones goes down, and we get a market crash, as I'm expecting, then the NASDAQ will fall considerably. But that would be a buying opportunity in my personal opinion. Fourthly, and none of this is financial advice, of course. You're responsible for your own trades. What I'm doing is my personal investments and trades, not financial advice. Fourthly, some biotech companies which have strong fundamentals, and you can speculate on biotech if you really believe in the company producing a vaccine for coronavirus. What are the 6 most important things I have learned as a stock market trader in the last 4 years? Firstly, slow money and fast money. Bitcoin and altcoins are fast money. Whilst preparing to see 50 to 1000% gains, you must also expect to see 50 to 90% sporadic declines. Gold and silver are slow money. Commodities can never go to zero value because the world needs to use them no matter what. Secondly, buy low, sell high. Obviously, easier said than done, but if you buy high, which I hate doing, example, buying Bitcoin at $28,000 when I could have bought it at $4,000 in March, feels like I'm an idiot and abnormal. That's why I haven't done it. Fourthly, when you buy undervalued assets, time is on your side. Just wait until there is FOMO, fear of missing out, and people and their dogs and their grandmas are buying it. No insult intended. And then, if you're a trader, you can take profits off the table if you desire. Fifth, always have dry powder, cash to invest/trade. You never know when the market will crash or if it will. Although I think we could be as close as a few weeks away, at most a few months away, from a 30% decline in the Dow Jones Industrial Average, SPX, and maybe a little less in the NASDAQ. If you believe in something, which is the 6th dot point, or something that has strong fundamentals, trust your gut. Example, the market looks like in a bubble territory right now, hence I don't feel safe buying any stock apart from the UVXY and the Bear Fund. Apart from those, I'm staying in cash. But those would be 2 trades I would be going heavy into if the market crashes, which would result in extravagant gains as I have just showed you. Although UVXY will they will go up extremely fast and they'll be very volatile if the market goes down. So lastly, I will run through the charts, some technical analysis, and some price targets. So we are still in an uptrend for gold since 2019. We would need a price shot below 1580 to say we have broken the uptrend, which I don't think that's even possible. The probability of that, in my opinion, would be about 5% out of 100, although possible if the market Dow Jones goes down 50% even, which I don't think that's possible. It could happen, but not likely. I'm looking to ring into gold at these prices as high as 1775, and I'm looking for a bargain should we hit 1650 or in that zone, but I wouldn't be against buying gold anywhere from 1735 down to 1675. Silver is the same, however, according to this gold silver ratio, which is currently here, silver is telling us that silver will outperform, the ratio is telling us that silver will outperform gold for the next 10 years. Why? Because the ratio has gone so much up and now it's time for a collapse in the ratio. The dollar index. If Biden wins, expect a continued dollar decline. If Trump wins, expect a massive increase in the dollar index. The 10-year Treasury. Should the market crash? I believe the debt market will explode higher, hence the yield will go down, even retesting March lows. If we continue to see a melt up, then we can see the yield go up as people are selling bonds. However, I believe the bond yield is more likely to go down as people will be flooding into bonds temporarily as the market crashes. However, long term, the yield will go up because I believe that people will be getting out of government bonds. Oil price, I believe, will uncertain right now. If the market crashes, oil price will go down temporarily due to COVID and government restrictions of exports and imports. And below $10 per barrel, I would be a strong buyer. Even below 20, I think below $20 per barrel, any oil stocks which have good fundamentals, blue chips, which are oil companies, are good buys if the oil price tanks. Long term, the oil price I think will go up due to industrial demand returning. Short term, it could go down and even retest the March lows. The S&P 500, SPX, the 500 largest companies in America, they will go down if the market crashes, obviously. Not a guarantee, however, I believe we're going to see this happen again, this crash happen again. The severity, I'm not sure of it, but I think that we are primed for a massive crash in the stock market within the next, before Easter next year, I think. And obviously, if I'm totally wrong and we get no market crash or dip or correction before Easter, I will thoroughly reevaluate my investments and decisions on my trades. The UVIXI, already explained, likewise for the Bear Fund, and the Nasdaq also. With that being said, thank you so much for watching my video on YouTube. Please subscribe to my channel. Also, please like the video because it will help the YouTube algorithm pick it up and more people will be able to learn about this stock market content and making money, trading, investing. However, for the last time, none of this is financial advice and should not be construed towards anyone's portfolio, as I am just a guy on YouTube expressing his own opinion on the markets. For the last time, please subscribe to my channel, leave a like and any comments which you believe would be helpful for other viewers as well. Any questions you have for me, please do not refrain from asking. With that being said, I wish you a very Merry Christmas, although a few days late, Happy New Year, and I wish that everyone will be making a lot of money in the next coming years, especially next year. Be prepared, guys and girls. Be prepared for a market crash. Stay in cash for now, but again, the UVIXI and Bear Fund I would be buying personally next week, and the lower it goes, the more I'll be buying, because I believe the market correction, possible crash, is inevitable, but not necessarily imminent. In the next few months, I would say, before Easter, expect the Dow Jones to go down. But it could go up for the next few weeks, but I am being patient because I believe the market will crash, along with many billionaires and expert analysts. With that being said, thank you for watching, and peace.